Everybody, once again, this is Jason Matthews, your financial guru. Once a month, as you guys all know, we do our recap of what the economy looked like in the previous month. So what we wanted to do was our team, we put together all the analysis, what happened last month, because for you can make the best financial decision for you, your family, your business, and your community, for you to figure out what's happening in the market and then what's also in the economy. So as we get going, we're about to go ahead and get the ball rolling. Thank you guys for tuning in, watching this. If you guys do feel any value in this, please share this on Facebook. If you miss out some of it, it's also going to be recorded on our YouTube channel. Make sure you subscribe to our YouTube channel, Jason Matthews, as well, as we go ahead and get this ball rolling, talking about the economic and market recap for May 2022, what happened last month. So with that being said, once again, thank you guys for getting on. My name is Jason Matthews, President and CEO of Matthews Financial and Insurance Solutions. I had started the firm in 2009 in the midst of the Great Recession. We had companies who were closing doors left and right in financial institutions such as Bear Stearns, Lehman Brothers, Washington Mutual, just to name a few. We decided to start this firm because I wanted to give my clients the best options to learn how to make the best decision for themselves, their family, and their businesses. So let's do a recap on what happened in the stock market last month, which is very interesting. So for May, the three major stock indexes registered as S&P 500. If you don't know what the S&P 500 is, the biggest 500 owned companies, it was 0.2%. The Dow Jones average, was the big 30 major publicly owned companies, was 0.3%, and NASDAQ is the tech, which is the tech biggest recap, was down 1.9%. So once again, the S&P 500 and Dow Jones average, they had positive returns in the month of May, but the NASDAQ was down 1.9%. So tech is definitely seeing a brunt of what's happening right now in the marketplace and stock market. So despite the late May rally, stocks remain significantly lower than the record highs. So right now, if you notice, the market changed drastically starting in November of 2021. So currently, the S&P 500 is down 14.2% from its record high. The Dow Jones average, remember, it's the 30 big companies, biggest publicly owned companies, is down 10.7%. And then the NASDAQ tech, we're seeing it left and right, it's been a bloodbath, is down 25.5% below its record high. It's funny, I was talking to a guy yesterday at a family event, and I met him, and he worked for a tech company. And he was talking about and mentioning how the company that he worked for was planning to go public in November. But because they saw what's happening in the market, they decided not to go public with their IPO, which stands for initial public offering, and they put it on the back burner. They have everything to go, but due to this turbulence right now in tech, they decide not to do that. And so we've seen that. I also had another conversation with a client last week, and his girlfriend was with us in the meeting, and she worked at Facebook, and she's talking about how we're now seeing hiring freezes now at Facebook as well, or what we call Meta, apologizing with the name change that they did last year. So we're seeing a lot of turbulence the most right now in tech. But let's look at some of the winners in the market. So right now, definitely energy prices are up 15.8% right now. And it was crazy. I had somebody a couple of years ago on my YouTube channel, David Blanchard, shout out to him. He was talking about, at that time, it was the midst of the Great Recession. Oil barrels and oil prices futures went negative, and now we're seeing a huge turn event for energy. So if you bought during that period of time that he was on, you're a huge winner, and they're winning big time. Utilities is up right now. Financials are up. Communications up. Healthcare is up, right? Basic materials are up as well. They all had great months. But the companies that went negative was industrials, 0.5%, technology, 0.9%, staples, not the company staples, but the staples, the basic things that we buy, is down 4.6%. Consumer discretion is down 4.9%. And which is very interesting, this last one is REITs, real estate investment trust, was down 5.2% in their remaining sectors. So there was some winners. Big winner was energy, but there was some losers also within this mix. So let's look at year to date. So we're going from January 1st, the first opening bell in January, to now year to date. And I know there many of the top stock rises are from energy sector. And let's look at those companies. Occidental Petroleum is up 139.1%. So if you gave them 100,000, they're up 139.1% year to date. Marathon Oil 91.4. And we all see this. We're all going to the gas station. We see the cost of oil and energy have drastically went up, or PG&E going to bill up. So Criteria Energy is up 80.7, Halliburton 77.1, and APA, another one, 74.8. You know, it's funny, when I was talking to the oil guy yesterday, David Blanchard, we was talking about, and I showed him these numbers. He's like, wow. And he said, I remember I was on that conversation. We was talking about these oil companies. We talked about Marathon Oil. We talked about these companies and why they're not going to go out of business. So it's very interesting. But with that, there has been some sharp decreases, though, in the market. The one we see right now, we see Netflix is down 67.2. We see Etsy's down 62.9. Align Technology down 57.8%, PayPal 54.8%, and Under Armour down a little bit over 50%. So if you had $100,000 in Under Armour January 1st, is now worth at that point $50,000. So right now, I really feel like we're going from a COVID world to a post-COVID, and we're seeing that the biggest right now in the stock market with these indexes, where the world has changed, where we went from being stuck in a house cooped up to now that energy prices have drastically went up due to the economy and geopolitical climate, and also with inflation. So let's look at these major companies that we always looked at that was been so sexy over the last couple of years. So here's a short list of really popular companies we all recognize, we all use every day. So right now, we also see sharp decreases right now in Apple, down 16.2%, Microsoft down 19.2%, Alphabet, or better recognized as Google, 21.5%, Amazon 27.9%, and Tesla, Elon Musk, the god, we treat him almost like he's god is a lot when it comes to business. He's down 28.2%. So a lot of these tech companies who've been around established have taken a big loss this year. Right now, Amazon might be because more people are with inflation hurting a lot of people's pockets, so they might just get into basics. Also, people might just not be buying that fancy car with Tesla as much right now. So while it's not a stock of one of the biggest losers 22, so far it has been cryptocurrency as well. So crypto, you bought Bitcoin year to date is down 17.5 during the month of May and sinking more than 50% since November 2021. So if you buy in November, you had $100,000 worth of Bitcoin, is down more than 50%. So Bitcoin and crypto is taking it, even though it's not in the stock market indexes, are taking huge hits right now as well. As last year, I remember everybody was talking about, you need to get some crypto. How much crypto do you have? Do you invest in crypto and all that? And I think it's all about, more importantly, I was listening to Ray Dalio, and he was talking about the importance of diversification. If you don't know who Ray Dalio is, he owns one of the biggest hedge funds, Bright House. And he was talking about the importance of the average investor and consumer and individual to diversify their portfolio, because you have people who are studying investing all the time, and they have a whole research department on what's going to be the next hot pick. But the average everyday person don't have that. So at their disposal. So the important thing is to diversify. And I think this is a great lesson learned right now, as we see the winners and we see these losers, where you just don't put all your money in Tesla or Amazon or any company, or just in crypto. You have to be diversified. So let's look at the major thing. I think this is going to be the biggest issue going into the November midterm elections. I think it's going to dictate a lot what's going to happen for as what I think is going to happen, which was my prediction that we're going to have a red river, where I think the Republicans are going to take over the House and the Senate, and they might put a lot of trouble and even a little government seats, all due to inflation and the economy with that. So when we look at the consumer price index, the next scheduled release is going to be June 10th, which is going to be later on this week. Last month, U.S. inflation waned for the first time since August 2021. So every month, inflation was going up. But last month was the first time it dropped a little bit. So with that being said, the inflation rose 8.3%, which was high, but it was a little bit lower than what we saw in March, which was 8.5%, which was the highest inflation that we've seen in 40 years. Month this month, the CPI increased only 0.3% from March to April 22, follow up with monthly increases of 1.2%, 0.8%, 0.8, 0.6. You see these numbers right here, spanning back from November 2021. So once again, when we see these numbers, this is how much inflation has been going up month to month to month right now. And we had the slowest decrease was in April, but we did see a lot of drastic increases. 12-month CPI, which is the Consumer Price Index, is up 8.3% through the month of April, which was released on March 11th. So we're going to start seeing these inflation numbers coming up soon again. So let's switch over. Let's look at these employment data and see how employment is going along as well. Inflation, usually during periods of inflation, you're going to see really good employment numbers. So according to the ADP's National Employment Report released June 2nd, non-farm private payrolls increased by 128,000 from April to May, and that's seasonally adjusted. That comes in a lower than what they thought, which was going to be 202,000 new jobs and 249,000 new jobs in March. Within this month, payroll increases, small business actually lost 91,000, while mid-sized business gained 97,000 employees, and large firms added 122,000. And I could definitely see this firsthand, especially being on the board for a couple of nonprofits, talking to small businesses, and they're the ones who everybody's looking for talent. It's hard to right now. We have an employment shortage issue right now. The problem we're seeing right now is larger firms and mid-sized firms can add additional benefits that simply small businesses cannot do, such as larger firms and mid-sized businesses might give sign-on bonuses. Small business cannot afford that for you to leave after 90 days after you take that bonus. They might add additional perks, extra benefits, health benefits might be better, and so on and so forth. So small businesses are having a very hard time, while the large companies and mid-sized companies are pretty much just taking, it looks like they're just taking the people that they lost. So you had 91,000, those people went to mid-sized and larger companies. Now, the good producing sector and service sector added the most new jobs with 24,000 and 104,000 jobs respectively, right? Information lost 2,000 and construction lost 2,000 were the two that lost the most momentum from April to May, which is very interesting with all the construction we see here in the Bay Area, but we're seeing a drop. So now so let me see this. Let's switch over to our price watch. So all inflation is not created equal, and certain goods and services are seeing more than others. So when we gleaned that over April's inflationary data, here's what we see. Air travel is up 33.3% increase. That is the highest that we have seen since December 1980. So I personally never seen air travel rise up this much. Energy prices, we see it at the gas tank right now. It's up 30.3%. Grocery store prices are up 10.8%, the highest since November 1980. And like I said, I have never seen grocery price go. I was born in 1983, so this is even before me. We're seeing it. Food, including eating out, is up 9.4%, and housing costs is up 5.1%. That also includes rent. So let's talk about next thing, rate hikes in the Fed. On May 4th, the Federal Reserve rolled out 50 basis point rate hike as part of the effort to stall inflationary growth, which was to be fully expected. They also dropped plenty of breadcrumbs that we can anticipate another 50. So in June 14, 15, we think we're going to see another 50 basis points based off what they're saying on the June 14th meeting, with Wall Street factoring this risk of several more rate increases throughout the year. Coupled with rate increases, the Feds look to curb inflation by reducing $8.9 trillion off their balance sheet starting in June. So before, might be a little bit more complicated, but the Federal Reserve had what they call quantitative easing, which was it was trying to have more push more money out to stabilize the economy over the last and grow the economy over the last 20 years due to the biggest thing was after the 2008 housing market crash and a bubble, which almost took away and killed our economy as a country. So we had quantitative easing to get this place back going. But now what they're doing is the Feds are reversing course. And this is the first time we haven't seen in over 20 years where they're doing a quantitative tightening, which is almost like they're trying to take some of the air out of the money that's in circulation slowly but surely. So we're going to start seeing that in June. Also, the Fed chairman, the most powerful person in the world, the person who has the power to print money, Jerome Powell, is on record that there may be some pain in reducing inflation and stabilizing the economy. So when you hear pain, think that there might be some recession and reducing inflation and stabilizing the economy with their target of a soft landing while inflation recedes 2%, while the labor market remains strong, but we avoid the hard stop of a recession. So let me go deeper into this. So what the Feds are trying to do is they're trying to control inflation. And part of controlling inflation is you're going to have to slow down the economy. The Federal Reserve and Jerome Powell, what they're trying to do is make sure they curb inflation without having us go into a deep recession. So they want to slow down the economy, which I think is naturally already should happen with the economy slowing down in my eyes, because there's less government programs out there. There's no more PPP, no more EIDL, no increase in unemployment. So I think the economy is supposed to naturally slow down from that in my eyes. But what these guys are trying to do, but they're trying to make it soft where we don't really feel the hurt, but we just feel better with the inflation instead of it being a hard stop where we're going to have a drastic inflation. So instead of just raising it 3 basis points, they're trying to do 50 basis points, slowly rise the interest rate slowly so we can get used to like a frog instead of a high increase. And the game plan and their goal is to make it soft. Now, will it be soft? I don't know. Jerome Powell said there will be pain. How much pain is that? I'm not sure. But we all have different pain thresholds. It's hard to measure people's pain when you go to a doctor. They say they cannot measure your pain. There's pains individual basis. So be prepared. And with that being said, is reduce your credit cards, increase, might have a side hustle, stack some money, be smart with your money investing. Understand that it might be harder. If you see food on sale, buy food, put it in your second freezer. Understand what's happening with this soft landing and this recession. So let's look at the GDP economic growth. Through the first 3 months of 2022 Q1, the economy tracked by 1.5%. That registers slightly lower than the estimated 1.4% negative GDP growth of Q1. So the economy slowed down last month, right? The negative GDP growth falls over the stellar Q4, which the economy expanded by 6.9%. 2022 auspicious GDP numbers reflect the sharp decline in private inventory investments, led by declines in motor vehicles, wholesale trade, exports, and the weaning off of federal government stimulus spending, which I mentioned earlier, as well as state and local spending during the pandemic. For Q1, personal consumption expenditures, non-residential fixed investments, and residential fixed investment all show positive growth. And here's a quotable, notable quote. Volatility is not synonymous of risk, but for those who truly understand it, for wealth. But this was by Francois Rochon. And thank you guys all for reading, being here. If you guys do want any questions about how to take advantage of this volatile time, what's the best thing for your situation, everybody's have their own personal situation. You could definitely give us a call at 510-229-7608. Emails at matthewsfinancial@gmail.com, or check out our website, mfis.biz. Once again, I know you guys could do anything. You guys should probably at work right now, but thank you for just paying attention and making the best, understand what's happening so you make the best choices for you and your family. Have a good day.